Hey, everybody, welcome back to the show. I am super excited, and you are in for a treat in looking into the future of venture capital from one of the best. Rafe Furst, he is a five-time founder. He is a two-time unicorn VC, a World Series of Poker champion, and he has a brand new book coming out in early 2025 titled The Future of Venture Capital. Rafe, welcome to the show. Glad to have you.
Yep, it's a real pleasure. I'm excited to do this interview. Yeah.
Yeah, thanks so much. Yeah, before we hop down here, you just kind of talked about having a colorful past and you've done all sorts of different things. So maybe kind of start with your origin story, kind of comic book episode one, version one, like who are you and how did you get to be where you are today?
Okay, so the comic book version has to start. I grew up in Venice Beach, California, as a
Oh, love Venice
latchkey
Beach.
kid in the 1970s. Well, little skater kid. I guess the commercial implications were pretty clear early on because if you've ever been to Venice Beach, it sounds like you have. They have
Yeah.
those folks hawking like sunglasses and silverware and clothes. That's been going on forever. And so at 8 years old, 9 years old, I was uh, selling texture, what do you call it, electroplated jewelry and whatnot, and doing that kind of thing. Um, but I I went to Stanford University as an undergrad and a grad student in artificial intelligence,
Oh,
such
wow.
as it was in the late 80s, early 90s.
Yeah.
Um, and I did artificial intelligence research right out of grad school. And this was before the web browser. A friend of mine in the computer science department showed me the first web browser, and I was like, "Holy shit, this is going to change everything." And so I spent the next few years trying to convince my boss that hey, we needed to transition into really doing all sorts of web stuff, and that just wasn't the mission of the institute. And so I gathered together a group of friends who are tech oriented and also risk takers, strategic risk takers, because I started playing poker early on, and played all through college with the group, and that group actually exists to this day. We still, have a daily WhatsApp thread and play games,
That's awesome.
and so, gathered together my friends, and we just brainstormed for, I don't know, several months, ideas. There was nothing out there, right? So everything was yet to be invented.
Sure.
And so we came up with all these ideas. And of course, other people took those ideas and made really good companies out of them. But our criteria was as follows. Like we were, uh, we were afraid of taking like VC money.
Okay.
Uh, VCs were known as vulture capitalists back
Yeah.
then,
Right.
and so we had to bootstrap, and we were technologists, and we were not marketers, we were not skilled at growing companies, and so we had to find a technology that we could build up and then sell to somebody who was going to take it, and so that's what we did. As strategic risk takers. I don't like the term gambler,
Sure.
uh,
Sure.
because we're gambling with an edge.
Uh-huh.
Uh, as strategic risk takers, we're just fascinated with like those office pools. Like we played March Madness and
Uh-huh.
football pick'ems and what these days they call it daily fantasy sports. So
Sure.
we created like a proto daily fantasy sports company called Pick'em Sports.
Huh.
Me and two friends, and you know, uh, after a couple of years, it was like time to go, time to sell it. We had topped out in our ability, and we sold it. Had a nice nice little exit, especially for us. Uh, and that was kind of like the launch of my entrepreneurial career and venture career, and
Sure.
so yeah.
No, that's very good. Very good. So maybe talk a little about being World Series of Poker champion. That's pretty
Yeah.
incredible.
Yeah. So after that exit, one of the things I did, I mean, I was I was a full-time like traveler, uh, and going around with a good friend of mine, Phil Gordon, who is a fellow
Huh.
AI researcher turned entrepreneur. He had his own cash out in the late 90s. And so we would just like travel around the world and go to poker events wherever
Huh.
they were in the world. Um, and it was a lot of fun. And of course, the marquee time of year was the World Series of Poker in Las Vegas. So
Right.
we've been playing like since, like all World Series events since 2000, 2001. And I was playing all through the 2000s, and I had some success. Uh, and in 2004, Phil and I started a company together to um, teach people how to play poker, kind of getting inside the mind of the expert. It's called
Okay.
Expert Insight, and we created these
Huh.
DVDs at the time that were like little mini movies. Some people couldn't really tell the difference between our DVD and an actual final table, but it was a simulated final table.
Really?
Yeah, it was great. And it had taken a book that Phil had written, a bestseller book on how to play poker for beginners, and it put it into video form. And you know how like if you are forced to teach something, you get really good at it.
Right. Yes.
So working on that company and on that DVD and also writing a lot about poker and poker strategy, it really leveled up my game. And so by 2005, the end of the 2005 World Series, I entered into a non-WSOP event
Okay.
called the Ultimate Poker Classic and won that.
Huh.
And the very next spring, like the first tournament I entered was a pot limit hold'em World Series event with like 1,100 people, and 3 days later, I came away with the bracelet.
That's amazing.
Yeah.
That's very neat. Wow. How about these unicorn VC events? Maybe walk us through those two instances.
Well, I mean, first I should say that like I'm no better at picking than anybody else, and if there's a VC that tells you that yeah they're really good at spotting the unicorns early on, they're full of it because it says that's really impossible. There's just too much variance and volatility and complexity. Um, and so there's this concept called the anti-portfolio, and you might have seen like some of the big VCs actually proudly, I think it's great. They proudly show all the unicorns that they missed,
Right.
right? And so I'll say that I missed. I mean, I was offered the ability to vest early on, and I think five different ones that I
Wow.
passed on for various reasons. So let's see, StubHub,
Huh.
Coinbase, Airbnb, uh, and like two others, like right now, I'd rather forget.
Right.
But um, I did invest in a company that would become Full Tilt Poker, uh,
Okay.
and that was an online poker company that became the second largest online company in the world
Wow.
after you know 5 6 years of operation. And so that was one. And then the other, it's not technically a company, but I learned about Bitcoin early on, and I
Okay.
thought I had this same aha moment as when I saw
Mhm.
the web browser. It's like, oh, this is going to change money. This is going to change everything. And so, yeah, I put a little into that.
Very good. Oh, that's excellent. No, awesome. Yeah. Well, maybe obviously had tons of experience in VC work. Maybe talk a little about your book that's coming out and what the future of venture capital is really about, the book.
Yeah. Yeah. So, I really got my feet wet just with that early liquidity as an angel investor. And I learned a lot, meaning I lost a lot of money. And, I was like, oh, yeah, that sounds like a great idea. It was just like whoever came into my orbit and I had no discernment or whatnot. But what I did have was this poker player's ability to just like, hey, if I have conviction on something, pull the trigger.
Hmm.
And it turns out that if you have a big enough bankroll, or if you can divide your bankroll into um, enough bullets, enough bets, that that's actually the winning strategy, especially because, like I said, there's very little signal to hold on to in the earliest stages. And the optimal strategy, the game theory optimal strategy, it turns out, is to massively diversify at the earliest stages,
Uh-huh.
um, so that you have a shot at, getting these unicorns in your portfolio, right? So I just made enough, investments in early stage stuff, spray and pray,
Uh-huh.
that, I got lucky in that. Uh, but there's also another dynamic, which is it turns out that there's um, so much value in early stage innovation, that if you were to somehow be able to buy the market, like index early stage angel investments, say,
Uh-huh.
historically you would have easily topped 25% IRR.
Hmm.
The catch is the volatility is just through the roof,
Right.
right? And so and it's not necessarily the unicorns that drive those returns. There's just a lot of singles and doubles.
Uh-huh.
And so there's this analogy to Moneyball, right? If you remember,
Right. Yeah.
Billy Beane of the Oakland A's, he discovered that while everybody, all the big market teams were paying for the home run sluggers, they thought that that's what won games and won, uh, championships. He figured out with the help of a quantitative analyst that no, actually, you can just pay the right price for really good people, hitters that got on base.
Right. Yes.
So it turns out that it's like a very similar analogy in early stage venture capital. Um, and so just back to this concept of playing Moneyball, massively diversifying, and then being able to pull the trigger and not waste time on diligence
Uh-huh.
that doesn't actually move the needle. And most of it doesn't actually move the needle because there's,
Hmm.
like I said, not a lot of signals. So I'm a believer in, it's all about the founder or founding team.
Hmm.
It's about their character. It's about their grit. It's about their values relative to their investors' values, right? And so, and it's pretty well known that these days that, like, a successful startup pivots on average something like 1.7 times before they get to the thing that actually turns into a commercial success. So
Sure.
whatever you think you're investing in, that's not going to be the thing most likely.
Uh-huh.
So what you're betting on, of course, is the founders, right? And so I forget where I was. I lost my train of thought, but help me get on track. So yeah,
Yeah. I mean, we were just talking about the future of venture capital and placing your bets, and we're really looking, there's no early signals there. So you're really looking at the founders and their core values and their grit and
yeah,
their ability to find the opportunity and pivot
yeah.
1.7 times and make it work.
That's right. So that all rolls up into a pretty straightforward strategy you know, that turns out to be, better for returns on a risk adjusted basis for sure, uh, than the typical VC strategy of investing in actually 10 times more early stage companies than a typical VC fund does. So a typical
Okay.
VC fund invests in about 10 companies a year, 10 new companies a year. They have a 3-year deployment cycle, so like 25 to 30 companies in a particular fund. And it turns out that by the numbers, that's just under diversified by an order of magnitude.
Okay.
Um, and so you need about 300 or 100 new companies a year in order to be diversified enough so that the volatility doesn't get you.
Okay.
But then you can harvest those native, market level returns, 25% plus IRR, if you're able to safely, if you're able to do that diversification. So a lot of the book is explaining what's kind of broken or suboptimal in the traditional VC world, and then outlining the strategy that I just shared that has you massively diversifying at the early stages. Actually, don't do follow-on investment if you're
Uh-huh.
following, it,
Okay.
you don't. I'm not. Nothing is a categorical. You must do this. You must do that. In poker, we always say the answer to every poker question, strategy question is, well, it depends, right?
Right.
Right.
Yes.
So, yes, I'm giving a bit of a formula, but there are no formulas. So you can tweak and whatnot. But at the base level, if you're diversified enough, um, you can do whatever you want.
Oh, very
And then
good.
pick, I'd say pick based on the character of the founders
Yeah.
and their match to you as an investor.
Yeah. Any particular, I mean, you mentioned grit, but any character traits or other traits that you really look for in founders? And I'm sure it depends, as you said, but like some
Yeah.
just kind of consistent ones across the board.
Yeah. I would say for me, it's about their integrity, just, you know, pure on integrity. Like they do what they say they're going to do.
Uh-huh.
In the gray areas where, they could make a choice that's expedient versus one that is consistent with their stated values. If if they're choosing the latter,
Uh-huh.
that's high integrity,
Right.
right? If they're willing to cut corners, they're willing to not do right by their investors. They're willing to
Mhm.
not do right by their employees and so on. So, um, there's this expression, how we do anything is how we do everything.
Right.
And so if you can somehow get those signals about the past actions and words of the founders, you can you can get an assessment. Best way, of course, is to have a history with them.
Sure.
So I'm kind of advocating a little bit of a paradox. Like ultimately, you want to have like a year's worth of history knowing the founders, but it's not really possible to do that at scale
Right.
necessarily. Whatever you need to do, but those are the things.
Yeah. How about for you personally? How has your definition of leadership evolved over time?
Yeah. That's a really good question. I think, early on, I naively thought that, leadership was the ability to manage manage people.
Uh-huh.
And while that's an incredibly important skill, um, these days I've come to understand leadership as really self-leadership.
Mm.
Um, so not preaching or telling other people what to do or managing them so much as inspiring them
Yes.
by the way one comports oneself. And so, modeling that integrity, modeling the grit, I guess curiosity is
Uh-huh.
another one. I'm not, you know, I in the debate of whether you need to be brilliant or like really high IQ. as a founder, I would say no. I think it's EQ over
Mm.
IQ, and I think being able to lead in this way, this leadership way, if you're able to lead a team um, that individually everybody's smarter than you,
Yes.
um,
Yes.
you're gonna beat I'd say the lone genius who's you see lionized a lot in the
Uh-huh.
media, but in reality, I think it's better to do it the other way.
Yeah. How about any, I don't know, trends or opportunities in the market that you see that you're most excited about? I mean, you talked about studying AI for the web browser, but
Sure.
any opportunities that, what are you seeing in the market that just really excites you?
Yeah, I'm really excited about, the potential. Well, it's even a reality right now for some of us who are using AI. I imagine
Hmm.
you're using AI,
Yes.
right? And so you know that it's kind of like a red pill until you've actually started using it and you've gotten, experience. Oh my goodness, that's just like saved me 10 hours in writing this section of the book, for instance.
Uh-huh.
I'm a, you know, I'm a proponent of utilizing AI to empower humans and human teams to do what they do better.
Uh-huh.
Okay. And so it's not about so much uh, trying to cut cost and automate everything, in my opinion. It's about how do we make humans be better, 5x, 10x better at
Uh-huh.
what they are doing, what they want to be doing, what's their highest calling, and allowing the automation to take the grunt work. So I have a whole chapter in the book called "This Chapter Was Written by AI." Utilize AI heavily in the writing of the book, but I mean, you'll read it. You're not going to think that the book was written by AI because it's really my ideas and my style. I trained the AI on my past writings, and I proved everything, so to speak. And so you really have to work it and massage it. But so using AI in your operations of your business, I don't care if you're in the VC business, family office, manufacturing, whatever. I think that if you're not already experimenting, utilizing AI to improve your performance and your quality of life, um, it's a mistake because you're missing out on the joy and the opportunity of what that can do for you. But B, in the competitive landscape, you're going to lose out to the people who are already doing that.
Uh-huh.
There's a carrot and a stick for utilizing AI, and so in the AI chapter, I talk about how specifically family office and high net worth investors can, for the most part, replicate and end run what the VCs are doing for millions of dollars a year.
Okay.
Uh, VCs are about to be disrupted. This is what I see coming.
Okay.
Already in the process of being disrupted. We can talk about that. So I outline how you can do that as a small shop, one or two people kind of replicating a large VC firm's operations. And that goes from like sourcing portfolio companies, diligencing portfolio companies, managing LPs, that kind of thing. Um, Analytics, reporting. Um, there's so much.
Yeah.
Uh, and uh, and then on the flip side, I'm actually bearish about a thesis that has you investing too heavily in AI companies
Okay.
for the simple reason that um, it's such a powerful technology that is exponential in the sense that AI improves AI.
Uh-huh.
So whatever you're doing with AI right now, in a month, somebody's going to have like there's going to be a better version. So there's really no defensible moats with AI. So what I say is look for companies that are brick and mortar or human relationship driven they're utilizing AI in a transformative way rather than investing in the core technology of AI,
Sure.
like pure AI companies.
Yeah.
So that's what I see in the AI front. We could talk
Yeah.
about blockchain too.
About what?
Blockchain.
Oh, yeah. Yeah. Go for it. Yeah. I'd love to hear your thoughts on the blockchain and how that's greatly impacting things.
Yeah. So there's another chapter in the book called the Revolution Will Be Decentralized.
Ha.
And so I'm a big believer, not only in what blockchain and crypto is doing on the purely financial front, but also what the Web3 technology, the core Web3 blockchain technology is doing for how we collaborate as humans. And
Mm,
in particular, corporate governance is, I feel, going to be decentralized in the future, meaning put on the blockchain. And if you've heard of this idea of a DAO, a decentralized autonomous organization.
right.
So in the Web3 and the crypto space, there are tens of thousands of startup projects that there's no company, there's no startup, there's
Right.
no LLC, there's no corporation there. But you have actually, billion-dollar unicorn ecosystems that are decentralized autonomous organizations where the governance, it's all done by, a fairly direct form of democracy or equity voting.
Uh-huh.
So people who hold the tokens for these DAOs, which represent the value of the network that they're and the utility of the network that they're growing. They're the ones that get the say in the future and the decisions, the strategic decisions. So I think this is really fascinating. I think it's revolutionary, and I think the governance and the way uh, uh, a lot of startup innovation is going to be brought out into the world is through decentralized platforms and decentralized ways of organizing.
Yeah. No, I think you're 100% right. Absolutely. I mean, everything is going to be on the blockchain.
Yeah, it does seem that it's in the same way that I would say Bitcoin is like a superior form of of the money technology because money is just a technology, a tool,
Right.
right?
Uh-huh.
Um, Bitcoin's just a superior version of that technology. Um, we had uh, this innovation called the joint stock and limited liability company that allowed commerce and actually allowed capitalism to flourish. Um, Before that, there was too much liability and too much, uh, let's say, inefficiency and overhead and risks in running a business.
Uh-huh.
But once we had that, limited liability and kind of this corporate shell, corporate container, it enabled a lot of innovation to happen and a lot of business to flourish. I think that this kind of another quantum leap is upon us.
For sure. Absolutely. Do you I mean, you talk about family offices being able to disrupt venture capital using AI. Have you found, because our firm, we do a lot of work with venture capital firms, PE firms, and family offices. Just but interested to get your thoughts. And obviously, I mean, if you know one family office, you know one family office because everyone's it's a unique entity. But do you find family offices behind the curve in embracing AI, or what are you seeing with family offices as far as how they look at utilizing AI?
Yeah, I mean, I would say, in my limited experience so far, yeah, I mean, family offices aren't necessarily the most future forward,
Right.
right? But I think there's this younger generation
Mm,
of family officers and heirs and principals that are digital natives
yes.
and are really sprinting and curious. And I've been really delighted to see what's going on and this next generation of family office and high net worth families.
Yeah. No, I think you're exactly right. It's that next generation that's the shift. That's the
Yeah.
tipping point for these things for family offices for sure.
Hmm.
How about in your career? What have been some of I don't know, some of the biggest challenges you faced and how have you overcome those, whether it's with portfolio companies or just professional poker? I mean, any of your
Yeah.
writing the book. I mean, what have been some challenges you faced, some headwinds?
Yeah. Well, yeah, let's see. I would say like as a like categorically, my Achilles heel or heels has been around just getting my own ego in check.
Okay.
Right. I think I hit it very lucky. There's like this, saying, that if you you know, uh beware of like going to Vegas and getting lucky that first time. Like if you hit the jackpot on the first trip to Vegas, you're gonna be coming back more and more and more.
Uh-huh.
And you lose everything. So that's kind of I think what happened to me is yeah, I just got really lucky. And didn't realize how lucky I'd gotten early on with that initial exit and and certain things. And just started to drink my own Kool-Aid too much and let people, put me on a pedestal and then I put myself and kept myself on the pedestal. And so
Uh-huh.
it was always, I always wanted to view myself and I let people look at me as the smartest guy in the room. And that's just the kiss of death. And so um, I was really I was not a great team player.
Okay.
Um, I was not a great team player, and I also grew up, in an era and just in an environment and a household where emotional intelligence really wasn't, uh, the biggest value, uh, and so I never really learned, um, yeah, like the softer skills and just like really also, I wasn't connecting to my heart and I wasn't honoring the human relationships in business. And so that really had me top out in the various ventures that I was like really good at formulating and getting people excited and uh, having, good ideas to start with and, maybe getting it into the marketplace, but then growing it. And it always eluded me and it caused dysfunction in the teams that I was in.
Okay.
Um, and then I'd say the biggest setback, and this was like, the thing that really started me on a journey of introspection and healing and personal development, looking inside rather than outside, was that company Full Tilt Poker that I said. Um, uh, there was a massive lawsuit by the United States government. It wasn't just Full Tilt Poker that was affected. It was the entire industry.
Huh.
They were, they wanted to chase us out, but we had some fraud at the company that was uncovered, um, unbeknownst to me and the other board members, but we should have known.
Uh-huh.
But it was uncovered in this big investigation by the Department of Justice. And over an 8 month period, I went from being on like top of the world to just in the bottom, like financially eviscerated. My status as a legal a free citizen was in jeopardy.
Huh.
My friendships were falling apart. My marriage was stressed. My
Sure.
mental health, emotional health, and I just had this huge crash at the end of 2011, beginning of 2012, and um, yeah, so and I've written about it and talked about it.
Uh-huh.
People can go out and if they're interested in the details. And these days, I write about it, um, you know, as a way to really share that, sometimes as founders or, let's say successful investors, it feels like you're the only one experiencing hardship, and
Uh-huh.
you can't let down the mask, and you can't like show any vulnerability.
Mm-hmm.
And I found that, uh, much to my ego's surprise, it's the exact opposite.
Mm-hmm. Right.
The more you share vulnerably, authentically, the more empowering it is, the more liberating it is, the more people, say, "Oh my gosh, I had no idea. This is what I've been going through. Thank you for, saying it out loud, and I feel
Uh-huh.
not so alone." And so it's really healing and connecting to talk about the
Yeah.
failures. Yeah.
Yeah. And I mean, the thing you find out is, I mean, especially in like the groups that I'm in of really successful entrepreneurs, every single one of them has completely failed. Like not just a business fail, but like everything, like what you described, at least once, if not multiple times before they built it back up again. And and you think you're all alone, but until you're in a crowd and a group of people and you find out, no, we share this in common. This has happened to, yeah, it's unbelievable. But you need a safe environment to be able to take the mask off and share that.
Yes.
You can't
Yeah.
just say that to everybody.
Yeah. Yes, and
Yeah,
yeah. Yes, and sometimes you're forced. Like I was
right.
outed, right?
Yeah,
Like I wasn't sharing my true role, at Full Tilt Poker with anybody.
yeah.
I was outed. And so once you're there, like, what do you do? So uh it actually was, I think the best thing that could have happened to me, frankly. It took a good 10 years uh, to really, understand and feel that as a true statement. But I guess if I'm gonna be honest, I would say, yeah, like whatever you need to do to feel comfortable and safe to share, uh, do that. But I'm also here to say that, you know, uh, there's something really, really transformative and powerful by whatever it is that you feel like you can't say out in public,
Right.
to do
Yeah.
it,
Yeah. I
right?
mean, yeah.
There's
Yeah.
more upside than downside.
Yeah.
Like life is asymmetric.
Mm-hmm.
It's a positive sum game. Unlike poker, it's a
Right.
positive game.
Yes. Yeah. No, and I think you're right. The deep dark secret is just out and it doesn't have power over you anymore. It's not the
Yeah.
elephant in the corner. It's yeah. No, that's very good. How about for you, like now, like today, what's has you most excited, the most fired up? What are
Yeah.
your passion projects or just the things that just really have you motivated and trying to create momentum on?
Yeah. So I recently read this book by David Brooks called The Second Mountain. Are you familiar with this
No,
book?
no. I'm gonna write that down as we're talking here. No.
Yeah, and it really describes like the journey that I'm on, and I think so many of us who have had a certain amount of like success, uh, in the default game of society, I'll call it the material game and the status game, which is, the first part of our adult life is called the first mountain, and that's all about, like I said, winning the game, learning the game, winning the game, material success, status, me, myself, and I. And there's nothing wrong with that. This is just part of the journey. But then, maybe in your 40s, 50s, 60s, whatever, some of us get to this place where like, oh, well, is that all there is? Or, or they've had just like this massive blow to the head, where you get your butt kicked and you're like, oh, there's got to be a better way. Or, there's various different ways to get into the valley where you realize there's no going back to the top of the first mountain. It's, it's finding the second mountain. And that's about meaning, purpose. It's about community. It's about, working uh, on an avocation rather than a career.
Uh-huh.
It's about integrating, all of me into my work out there. Um, and it looks different for everybody, of course. And so I'm on my
Sure.
second mountain journey. What I have discovered is the really the most powerful, meaningful activities that I've done along the way on my first mountain have been around helping other people make transformative leaps in their career in their life.
Okay.
I just really love um, these like coaching and advising.
Sure.
Um, I just really love it when I'm sitting with somebody one on one or in a small group, and um, and they have this aha, this unlock, I call it, like,
Uh-huh.
oh, and then they're able to, transcend something that's been blocking them, or they have an insight that kind of unlocks possibilities that they didn't know, but that's like really what they want to pursue. So I love those kind of moments. And I just love helping people get to where they want to go, especially innovators, people who
Uh-huh.
are taking big swings. Um, you know, I'm a I'm a big believer and fan of true social enterprise, where yes, for profit, for good, uh, but it's an integrated way. It's not what you're doing. It's who you are and how you go about
Yes.
every
Yes.
interaction, right? Making sure that everybody around you, all the stakeholders, uh, are made better off by your decisions, and you're not pitting anybody against each other. Or it's really that positive sum game,
Yeah.
you know.
Is there, I mean, you mentioned innovators. Is there a certain profile of people that you're doing coaching with? Like who are the types of people that
Yeah,
you're coaching?
yeah, yeah. So on the innovation side, of the founder side, I work with founders of all sorts and innovators. Um, and then newly on the family office and high net worth side, I'm just really excited to share the good news about what's going on in VC and what could be going on in VC. Because like the subtitle of the book, Future of Venture Capital, the subtitle is uh, how to win the venture capital game and make positive impact. So
Excellent.
I feel like there's a real opportunity, especially this next generation of wealth holders, to end run, beat the VCs at their own game,
Huh.
and make much bigger impact in the world. Not just this, like Silicon Valley is basically factory farming of unicorns. That's what
Right.
it
Right.
become, and uh, it's not really healthy for most founders and companies, because if you're not clearly on that track, or if you get off the track of the unicorn, they kick you to the curb. It's like,
Yeah.
and so and then it's also not healthy, like as an LP investor in venture funds, and we could talk all day about what's wrong with that.
Yeah.
A lot of perverse incentives, but the number one, there's this dirty little secret in venture capital land, which is over half of LP funds, of venture funds, lose money for their LP investors.
Huh.
And it just goes back to that numbers game, the volatility.
Yeah.
And so if VC fund doesn't have, like I said, at least 300 in their 3-year cycle deployment fund, 300 portfolio companies, they're actually gambling with LP money,
Uh-huh.
right? And so there is a new class of it's small and growing, but a new class of, I would say, Moneyball funds,
Okay.
and to the accelerators like 500 startups and Y Combinator and Techstars, yes, and one that I helped form, called Right Side Capital, which,
Okay.
you know, thousands and thousands of investments at the early stage. But I really want to help firms that are willing to actually do this themselves. um, and go direct. Or, if they're not ready for that, I can show them how to become what I call smart money LPs,
Uh-huh.
which is about diversifying into the funds that you do invest in.
Sure.
You know,
So I mean, is one of the things you're doing actually working with high net worth people and family
yeah,
offices to do this?
yeah,
Yeah,
absolutely, yeah, yeah,
that's
yeah.
amazing.
Mhm.
I bet that's a
That's why,
blast for you.
yeah,
Ton of
yeah,
fun.
it is. Yeah, I mean, that's why I wrote the book,
Yeah.
right? Yeah. So,
How about, think of, we talk about high net worth people, family offices. How about just aspiring entrepreneurs, people that are either young founders or people coming out of corporate or something else that are going to go into the entrepreneurial world and be a founder? Any advice or insights you'd have for those types of people? I'm sure you have
yeah.
a
So,
lot, but
yeah. So, um, oftentimes I get asked to help on fundraising, of course. And if you're at the earliest stages, and you're not, let's say, cash flowing yet, you don't have revenues, I would say, um, it's really best to find an accelerator program of any sort, because they're going to give you everything that you need to know, just like a starter kit, and give you a boost. Because it really is, in my opinion, it's about doing whatever you can to get to cash flow positive without taking VC money.
uh-huh.
You can take friends and family money, but once you're on the VC track, like we talked about, it's really the unicorn game, and you're more than likely gonna flame out,
Hmm.
and you're going to be at odds with your VC investors if you're successful. It's a Faustian bargain.
Uh-huh.
So if you can control your own destiny by getting to cash flow positive, which means that you don't ever have to take outside money again, you get to take strategic money. By the way, that's when all the VCs will be lining up,
Right.
is when you don't need them.
Right. Exactly right.
And so if you can get to that, that's like the number one tip.
Yeah.
Um, and you know, for folks that are, let's say, cash flow positive, they're whether they're seed, Series A or Series B these days, doesn't matter. It's really about strategy at that point. And so, I mean, that's the other thing that I help founders with is strategy. I think that there's so many companies, so many great ventures that are won and lost on the strategy.
Uh-huh.
And, for my years of being a strategic decision maker under conditions of uncertainty and risk, aka poker, aka venture capital, aka
Uh-huh.
startups, I have a lot to offer those folks.
Yeah. How about for the going back to the kind of the aspiring entrepreneurs that don't understand, what is the accelerator program? How is that a starter kit? Maybe just talk a little bit about just like what actually that means.
Yeah, typically it's like a 3-month program where you're in a cohort of other like early stage startups that, um, you know, maybe just a single founder, maybe a very small founding team, but they're typically pre-revenue, and they may be pre-product. They have a prototype or whatever. But the idea is to help you get to that next stage where you're in market, um, that you're also familiar with the funding game, because it is a real a game and an art. Learning how to make your pitch, learning how to create your materials, understanding how to network and meet folks that can help you, whether it's on the funding side or otherwise. Uh, Finding co-founders, finding talent, employees, right? So this is the game that you're in,
Uh-huh.
right? And so uh, it's a boot camp, um, slash finishing school for aspiring entrepreneurs.
Yeah. No, perfect.
Yeah.
How about just kind of looking back on your career thus far, any particular decision or action that you've taken that you have would say has been most pivotal in your success thus far?
Hmm. Um, well, I mentioned, uh, you know, making a big bet on the internet, on the web when it first came out, and
Uh-huh.
and making a bet on blockchain. I mean, those are obvious. I think the meta pattern there is really following my gut and heart, um, and then using my head and my analytical ability to um, to either validate or invalidate those decisions. And I'm not saying that that's the approach that I've always take. I think when I've gone astray, it's been head led, and that's the
Sure.
that's the problem. And I think
Uh-huh.
I see a lot of folks falling into that trap as well. We get in love with our ideas and whatnot, but the times that have been the most impactful on the upside have been when I've led with my gut and my heart, um, and I've been aligned there.
Uh-huh.
Um, and then the times on the downside that's been most impactful, it's the opposite.
Yeah. Oh, very good.
Yeah.
How about and your book is certainly doing this, but how are you working to build like a lasting legacy through your business ventures? And again, your book is right on point for doing this, but how do you think about building legacy
Yeah.
or impact?
Yeah. Yeah. I know it's a tricky question or word because, you know, um, I, I'm not really focused on that. I mean, maybe I was at one point, but I guess on the second mountain journey, it's like I really I want to um I really want to be experiencing every moment as like just being in the flow
Uh-huh.
and having a really meaningful um time with whoever I'm in front of. Like right now, this is like really fun, and I'm like,
Uh-huh.
we're connecting, and
Yes, totally.
that's it. It's like,
Right.
and I just know from experience that if that's the focus, be right here, right now, right? All the gurus say that, but right here, right
Right.
now, yeah,
Yes.
and really honor who it is that I'm in relationship with. All the results and the legacy and impact will take care of itself.
Yeah. That's a great answer.
Yeah,
How about personal definition of success for yourself? Maybe on this second mountain, what does success on this second mountain mean to you?
yeah, yeah. I think success is I guess it's the ratio of time that I'm in that flow and right relationship versus
Yeah.
not. Um, and really being mindful of who I'm, spending the most time with. Is that in line with my priorities? Like, my family,
Uh-huh.
most important.
Yeah.
I've, I have three boys and a wife and an incredible family, extended
That's
family,
awesome.
and a community here in Boulder that I'm in love with. And so, if nothing else, like if everybody here is thriving, uh, I can call it quits and say it's a great life. And
No.
then just beyond that, it's like it's who I'm working with,
Hmm.
whether it's founders or family office folks or anybody, professionals. You know, I just like to take it, one person at a time or a community at a time. If I can help um, make things, better, then that's great. Like I'll keep doing that all day long.
No, that's amazing. That's great. Well, good. I guess any parting thoughts or words? Maybe where can people find your book, Future Venture Capital, here in the new year? Is it going to be where can
Yeah.
people find the book or buy the book? Because Sounds
Yeah,
like that
it'll
is
be on Amazon.
okay.
But I think the best place, and I'm in the middle of revamping it. So, but it's my website. It's just my
Okay.
name, rafefurst.com, and I'll spell it because it's not obvious.
Go
So
for
that's
it.
RAFE, first, FURST.com, RAFEFURST.com. Yeah.
No, oh, that's perfect. Yeah, and we'll have all your socials and contact and that website all here in the show notes, so everybody has that. But Rafe,
Yeah.
this has been fascinating and a total pleasure. And you are a rock star, and this is super fun. Getting a look into your mind and the way you view the world, and excited for your venture up the second mountain here. That's fantastic. So thank you.
If I'm honored. I just wish we had time. I could ask you a few questions and interview you. So maybe that you'll have me on again and I can flip the script on you.
That could be kind of fun. You bet.
Uh,
Well, good. Well, thank you, Rafe. Really appreciate you so very much.
Likewise, really appreciate you, Kip.
All right.